Hello, I'm Joseph Quijano, Certified Financial Planner with Become the Banker.
And I'm Jordan Quijano. We want to welcome you back to watching our videos. And today, it's a great topic. We're trying to shift gears a little bit with more education past just our financial world here. We've been talking a lot about safe money strategies, insurance, certain investments that are guaranteed away from the market, but we want to share more information with you. And that's why we brought in a guest speaker with us today and a very close friend and client of ours, Ruth. I'll let you introduce yourself here.
Terrific. Well, thank you, gentlemen, for having me. My name is Ruth Vogt, and I am a mortgage lender. I've actually been in the mortgage business since the late 70s. I'm sure that means that I've been in the business longer than some of your viewers that are watching.
I'll put myself out there. Yeah.
So,
longer than Jordan.
As well. Let me tell you, a lot of things have changed over those years, and it's been a fun journey to watch everything. As a matter of fact, when I first started in the mortgage business, I worked for savings and loan. Do you even know what a savings and loan?
I don't. I was about to say that question mark grew up there. Yeah.
So we've been around the block a few times, but one thing that I think has happened is that it's become much more complex. Not only in your world of financial planning, but in the mortgage business as well. Much more complex.
Yes.
So I wanted to thank you, gentlemen, for letting me come in and maybe talk to you about how we visit or we break down the overall financial picture, combining what you do and what we do.
I love that.
So we actually talk about there being three buckets in their overall financial picture. The first bucket is their monthly income. The second bucket is what you gentlemen do, which is putting aside the nest egg. The third bucket is their mortgage, their home. Homes are very important to folks. They should be. They're the American dream, right?
Usually the biggest asset, right? That most people have.
Absolutely. And not only is it the biggest asset, but it actually ends up being the biggest expense. So let's talk about that a minute. If we look at the monthly income, that comes from a variety of different sources. It could be commissions, it could be wages, it could be pensions, it could be a number of different things.
Anything,
absolutely. Then we look at the second bucket. From the second bucket, that's where they take money from their first bucket and they pay it to you folks.
That's right.
And you find ways to help them invest in different vehicles. Did you know, actually, that there is almost twice as much money right now in home equity as in 401ks?
See, that's shocking to me and that makes sense because we talk about this all the time, that most people don't put enough money away in their 401k, and the average person today retiring has right around 47 to 50,000. And so you're hitting it right on the head. They have 2 times that in their house, and then they have to live off it for retirement.
Exactly, which is frightening if we don't take a look at some other options that we might have available. So we have monthly income that comes in. They spend a little bit of money on their nest egg through a whole bunch of different options, whether they're IRAs, whether they're 401ks, so on and so forth. But the third bucket is the home, the mortgage. They spend a lot more money in their home than they do on everything else. It's mortgage payments, taxes, insurance, upkeep. I mean, the list goes on and on. They might do build-ons, they might do refinishes. You know, when I walk into a neighbor's home and they have a beautiful granite countertop, all I think of is cha-ching. That could have been retirement money.
Seriously, you're right. And it's gotten more expensive over the years. You know, when you talk about PMI insurance, you talk about just regular tax insurance on the houses in today, especially here in Colorado where we're from, it is expensive and it only continues to rise.
Exactly right. So if we take a look then, again, at those 3 buckets where we look at where's our income going and where's most of it building, it's building into our home equity. Now, I'm going to tell you that there's been a transition in our thinking of how to best utilize your cash. Because there was a point in time where we would actually do amortization schedules that said, here's how much money you would make every month in your monthly payment for the next 30 years and pay your loan off in 30 years. However, we started thinking about that. We started thinking about, is that really the best use of the money? Because there's a difference. They might be building up home equity. That's what they have here is equity.
Right.
What do they have here? They have liquidity. what's the difference? Let's talk about the difference. What would you rather have? This is equity. It looks like money,
yes.
right? It kind of looks like money, right?
Yep.
But this is liquidity. Can you take this to the grocery store and buy groceries?
No.
No, you can't. You can, though, take your liquidity to the grocery store, and you could even get nice and pay the guy's groceries behind you, as long as he's not paying, buying a lot of groceries. You might need a few more of these today. But there's a huge difference between whether to put your money into equity or whether to keep it liquid.
I love that you're saying that, because
absolutely.
This is a point that we don't see enough. I mean, I talk about, my example is that the money's in the bricks a lot of times, right?
Yeah.
It's dead money. You can't touch it really. It's there. There's certain ways to go about touching it. I know you're going to cover that here shortly, but that's the problem, is we have so much equity nowadays, but not enough liquidity. I love that you're bringing this up.
Absolutely. And how do you get the equity out?
That's the question, right? How do you?
Yeah, that's a $1 million question.
Well, it's not pretty, is it? Because if you asked 100 people, how do you get the home equity? How do you get that, turn it into liquidity? Most of them are going to say sell.
Yep.
Or take out a loan.
Makes sense. Yep.
Take a HELOC, take out a new second, take out a cash refi. If you do the first one, where you sell it, where are you going to live?
Exactly.
And are you going to go pay rent?
Right.
I don't think so, because then you're paying somebody else's, into their wealth, into their equity.
And especially here in Colorado, you might get a lot of money for your house, but you can't go buy another house.
Right.
You're going to spend all the same money.
Exactly right.
Yep.
And if we go with the other option, which is to take out a cash out refi, what did you just do with your monthly payment? Increased it. Did that help you? No. Absolutely not. It's like a short-term fix for a long-term problem.
And it's for 30 years typically, or however long, and now they're paying more interest on this other money on the back end.
Right,
Yep.
right. So what I love about you guys being father-son and in business together is, and I know you guys know this, but not most of the rest of the world knows this, my daughter and I are in business together.
Yep.
As a matter of fact, so is my granddaughter. It was interesting as I was raising her, she would complain about the mortgage business. Complain, because I'm sure you guys are the same way. When the phone rings, you answer it.
Oh, yeah.
It doesn't matter. You've got to be there for the consumer. And so she said, I hate the mortgage business. I hate the mortgage. Now she's in the mortgage. And guess what else? Her daughter, my granddaughter, is also in the mortgage business.
Goodness.
And I have a second granddaughter who's 16, and we were driving, I was driving her to gym class the other day, and I said, have you thought about what you're going to do? And she said, well, I think I'm going to get in the mortgage business.
Oh my God.
See,
that's
talk about generation to generation.
Yeah,
and that's
that's
who
beautiful.
more can you trust than family sometimes, I'm telling you.
And we, website names are really important. We went to a seminar a long time ago, and it seemed that the website name that we should go for would be Lifetime Lender. But it didn't. It's taken on a whole new meaning than it did when I first got that domain name, 20 years ago or whenever I was first told that I should do those things. So Lifetime Lender is now truly in our.
I love that.
But it even takes it. We even take it a little further than that with the name, because it's not just myself, my daughter, my granddaughters. Both my daughters, by the way, are in the mortgage business. So it's a whole, that thing, remember that expression, don't put all your eggs in one basket?
Yes.
All of our eggs are in the same basket. So when we were thinking about how all the family's going to fit into each of those eggs in our basket, it just seemed natural. My daughter does forward mortgages.
Okay.
What that means is that's your traditional mortgage. That's the mortgage that you get for your first time home, your first home, or maybe rental properties and so on and so
Going
forth.
30 years, 10 years
Absolutely.
forward. Gotcha.
You pay the bank every month to keep the monthly payments, and you might have investment properties. I know, Joe, you and I talked about one of my investment properties that we had and whether the cash flow made sense and so on and so forth. But there gets a point where you're beyond that bucket number one where you're making all that money.
Right.
And all of a sudden your world changes a little bit. Your perspective starts changing. You no longer decide to take that wild and crazy vacation because you know you can make up another check to cover it.
Right.
You start thinking, how long am I going to live? And you know, I've told my kids I'm more afraid of living than I am of dying, because I don't know how much money I'm going to need.
See, and I think that's a great point to put out there, because not that it's morbid and talking about death, but we got to be realistic.
Right.
We're living longer, sometimes to 100, but do we have enough money or willingness to work to age 100? Most of us don't.
Well, and you know, maybe a better way of putting it than saying I'm not afraid of dying is to say what my kids are afraid of is that I'll end up moving in with them.
Oh my God! Yeah,
That's right.
You see, Ruth, you know, there was a study done where they said, at a leading university, where they came up and said that the biggest fear that people have is running out of money on retirement. And they fear that more, listen to this, more than death.
Yeah.
Makes sense.
And that's exactly what you said.
Absolutely.
You know, people are fearing that they're not going to have enough money to retire with, or whether their money's going to last as long as they will.
Right.
Yes.
Think about that. And we are living longer. You're right.
Yeah.
Yeah.
I mean, if you look at mortality tables, or, you know, our age is increasing every single year. As a matter of fact, you know, since we deal with life insurance, you know, they're pretty predictable tables. They have us living now, get this, to 121 years. Every single illustration that we have has it all the way down to 121 years. Can you imagine that?
It's shocking. I mean, I remember hearing about somebody living to 104, 106, but it's more and more common. But your point to what you were saying is, what is somebody to do with not having maybe the cash flow and your third bucket? What can they do with that?
Well, while they're in that income earning stage,
Yeah.
they need to be working with the financial planner as well as the mortgage lender and say, what's the best use? Michelle, who is our forward lender, she's changed her discussion with her clients and said, here's what you need to do. What we need to look at isn't whether or not you're going to have your mortgage paid free and clear when you hit retirement age. But let's revisit that and let's say, if you made just your standard monthly payment, you would retire, and you want to retire at 62, that might mean you have 50% of your house paid off.
Makes
Now,
sense.
instead of paying extra money toward your home to pay down that principal, put it into bucket 2. Put it into investments. Keep that money
working for you.
Keep it liquid.
And liquid.
Don't be putting it into equity.
Yes.
All right.
Very smart.
So she's changed her thought process and how she counsels her clients, saying things have changed.
Yeah.
We're no longer thinking along those lines.
That's brilliant.
That really is.
Because when you get to that age of retirement, and did you know that they call it now the silver tsunami? I'm sure you've heard about that.
Okay.
Where like 10,000 people a day are turning 62.
Yeah.
And the challenges that's going to put on our economy, we better take a different look at what the financing might be. We need to keep our eyes open. We need to be educated on what those tools might be.
You have to. Social Security, to that point, that's the fear, right? Is, will it run out? Yes. When will it run out? They're saying in the 2030s range, 2034, but will they fix it? They're going to make something different change, and what will it be? Maybe they'll postpone on when you can take it. Maybe it'll be a less payout. Who knows? Maybe higher taxes, which we're all going to see. But you're hitting it right on the head. We cannot expect the last 30 or 40 years, what our parents did, grandparents, to work for us.
Right.
We're in a whole different economy.
It doesn't work anymore, you know, and I like what you said again. I'd like to repeat it for the audience. I mean, it's not worth paying down your mortgage.
Yeah.
Take the money that you're going to use to pay down your mortgage and put it in the second bucket.
Make it work for
To
you.
keep your money liquid, but keep it safe. And that's exactly what we do at Become the Banker.
Good point. Yeah.
Right. And I think that a lot of folks figure they don't trust themselves.
Yeah, that's
So
good.
that's
Yeah.
why they want to put it where they can't touch it.
That's a
Well,
good
that's
point.
all well and good until you really have a disaster coming up. But by working with, and I know, Joe, you've put me into some of those programs where I can have access to it, but I can still have options. And I think you even bought your first house doing
You got
that
it.
program.
Vehicles, houses, and that's the key. Is you're hitting everything you're saying is
Liquidity.
right on my what we tell everybody, because you have to have access just like the pandemic. You know, I mean, it's a great example. What were you to do if you couldn't even pay for groceries?
Right.
I mean, they're not going to, the mortgage sometimes was going to say, hey, you got equity here, let's cut you a check so you can pay for groceries.
Because guess what happens? If you paid $10,000 extra on your principal, does that mean now you get to skip 3 payments? No. So you just went through the pandemic. You had to skip some payments. Now you're upside down. And you know, with the forward mortgage, what we say, the deed of trust says, no pay, no stay.
Oh, absolutely.
It is so true.
Absolutely.
It is so true.
We have met clients that lost their jobs
Yeah.
with a pandemic. They were house rich,
So
Yep.
true.
equity rich,
Yep.
but they couldn't go to the bank and borrow money because the banker did not lend them the money because they were unemployed.
Oh, yeah.
Right.
I had people that became disabled, Ruth. You know, they couldn't work anymore. They were house rich,
Cash
but
poor.
cash poor.
Yeah.
They went to the bank to get a loan. They were turned down because they
Yeah.
were not employed.
Right.
You see, they got control over your equity. They got
Absolutely.
control. It's not like taking, like you said, your equity to the bank or to the grocery store.
So true.
It's totally illiquid. So your point is really well taken for people watching this video to keep your money liquid. Liquid.
Because guess what, Joe? I can come to you anytime I want and say, can you give me the money because now I want to pay off my mortgage.
Yeah.
Absolutely.
But I can't come to the mortgage company and say, mortgage company, give me $10,000. We're nice people.
It's right.
But we're not that nice. I'm sorry. There are some rules that we have.
There is.
But now let's even take it to the point, why did I meet with you in the beginning? I met with you in the beginning because I was worried about my retirement. You know, we're now in that stage of retirement, and so our buckets are changing. So my bucket that used to be the big income earning bucket now is starting to shrink down.
Right.
So as you go through in the retirement stages, you go through and this bucket goes down because now you have Social Security, you might have had some pensions, you don't
Right.
have those commissions, those wages and so on and so forth. That bucket shrivels, to
true.
be honest.
Oh, yeah.
And so how are you going to make ends meet? You hope that you put enough into your bucket number 2 so that you could pay. But did you know this? 44% of people that retire still have a mortgage.
Yes.
They
See,
still have a
that's
mortgage.
Scary. That's
now,
scary.
now this is where it gets really, really frightening.
Yeah.
So what do they do with that little bit of money here?
Mm-hmm.
They pay it into their mortgage
To pay the house off. Right?
because they have to, because no
Yeah.
pay,
Right.
no
No
stay.
stay.
So
Right.
they have to pay
Yeah.
it there first.
Yep.
All right? And where do they get the money from?
Bucket 2.
Bucket 2.
So what are they left
So
with?
they're
Yeah.
taking liquidity,
That's
paying it into equity,
Yeah.
and this is gone, and now it's
locked
stuck.
up. It's all locked
Exactly.
Locked up.
Yeah.
Exactly.
just because they wanted to
Yeah,
again
that's-
stay in the house.
Mm-hmm.
And so you're hitting all the right points because people, I think we just don't realize this. We just thought, let's pay the house, work hard, do what we need to do. But that's
It's
just
what
not
my
where we're at.
grandfather believed.
Yeah, it's so
right.
true.
Keep the roof over your head. My husband recently retired, and our bucket went from this big a bucket down to this big a bucket, and we had to make some adjustments. Because I'm in a commission world, I don't know
Yeah.
what's going to happen. I don't, I wasn't very sure.
Right.
I wasn't ready to cash in my money with you yet either, because my money that is going to be for retirement that I put in with you folks, the longer I let it go, the more I get out
Right.
when
Very
the
true.
time comes. So, one of the things that we have to keep our eyes and ears and our minds open to is what are some of the tools that are available today that weren't available or weren't available in the same format
Right, the
that
same
they
capacity or yes.
So what we did was we got a reverse mortgage. Now, that's how I can take and turn my equity back into liquidity. But better yet, that 44% of people that are making payments, I no longer have a mortgage payment.
Beautiful.
Did I pay off my loan? No. My house, I have too big of a loan. I mean, a mortgage.
Yeah.
But I also have a lot of equity. A lot of equity, but a mortgage. So by tapping in to my equity, I now no longer have a monthly payment. So guess what I can do now? I can leave my money with you, not only leave it with you, but I can still build with you.
That's
For,
right.
I mean, I'm well over my 62-year retirement age. I'm
Oh,
here to
stop
tell you,
that.
I've got great grandkids, and
Yeah.
but I want to make sure that I can live independently.
Yes.
And I want to die in my own home. And what that did for me by getting the reverse mortgage was give me the comfort of knowing that I will always have a roof over my head. I will always have a home. My kids love it. They know I'm never going to move in with them. They think it's pretty great. But I also no longer have that mortgage payment so that I can continue building my money with you, Joe.
Yeah.
But in addition, I have the comfort of knowing I'm going to die in my home. I mean,
That's huge.
my mother is in a nursing facility right now.
Yeah.
My mother has taken everything that she's had over her whole life, and it now has to fit in a chest of drawers that's like 5 drawers, and a closet door that's no bigger than the door to enter this room. You know, here's a wall that I have in my house. This is my family genealogy. I have all kinds of fun things. This isn't going to fit in a nursing home.
No.
Right.
And not only that, I can't trust that my kids aren't going to throw this stuff away.
You never know.
That's right. And at least while I'm alive, they're never going to,
That's
because
right.
I'll live in that home until I die. Afterwards, I don't know what's going to happen, and so be it. But the other beauty about that reverse is, I mean, it's not just, what if you're one of those that your home is paid off? Well, so if it's paid off, you might not be ready to draw Social Security yet, because we know the longer you wait, the more money there is.
Right.
Do you want to take it out of your income? You still have to live.
Yeah.
You still want to be able to make some money. So what if now you were tapping into that money out of your home equity, and we can actually even set up a payment plan where out of the equity of your home, you get a monthly support that helps you with your day-to-day activities so that you're not pulling out of your nest egg yet.
It's
all right?
beautiful.
This is still growing. Your equity is still growing. But you're using part of that equity to maintain your day-to-day expenses and not tapping into your money.
That's crucial. That's crucial. I mean,
Joe, I'm telling you, this is going to get me to where I can stay in my home based on our program. And you know how structured I am. I'm like, if I retire at 72, this is how much. If I retire at 76, this is how much. If I retire at 78, this is how much. That's why, because I'm not pulling money out of my bucket too.
I love that, Ruth. It's brilliant.
Yeah.
I mean, it's totally brilliant. I mean, and the way that you simplify things, people really don't understand mortgages, number one, and number two, they don't understand reverse mortgages.
Yes.
And like Ruth actually said, what used to be in the past is no longer the way it is today.
It's changed.
It has changed.
Gotten better.
Just like if you take annuities, for example, what they used to be in the past, they're not the same today.
Insurance.
They're better.
Yeah.
They're better. Companies are very forward thinking. They actually cater to the consumer, don't they?
That's right.
They cater to the consumer. So whatever the consumer wants, they're going to get. So a reverse mortgage today, the way that you explained it, Ruth, is absolutely brilliant to be able to keep your nest egg intact for your retirement and to keep your first bucket going.
Have an
to
income.
help you have an income.
To live. Just to live.
And the best thing about it, which I love, is the liquidity.
Yeah, it's true.
You see, the liquidity is the key. A mortgage is a mortgage. There's money
In the
between
bricks.
the walls,
It's
right?
locked up.
You can't touch it.
You can't.
Absolutely.
You gotta have it liquid.
Now, I'm sure that many of you have heard that phrase, reverse mortgage, and you just tuned us out because you've heard bad things about reverse mortgages. Trust me, I actually took my first class on reverse mortgages, got certified 20 years ago, came back, told my company I'm not doing them because if it's not a product that I would do myself, it's not a product I want to offer to my clients. Well, in that period of time, there have been so many changes, and there's reasons for those changes that we'll talk about maybe in a follow-up seminar, a follow-up meeting. But there's reasons that the government had to get more aggressive in keeping people in their homes, keeping people away from the need of being in nursing facilities because we're just not equipped to handle that as a society. So please understand that there's more to know about a reverse mortgage today than there was even 5 years ago. Give us a call, find out reasons why it might work for you.
And Ruth, that brings up a good point. You're right, because we meet with clients every day, and that's the first thing people say, reverse mortgage, how can that help me? And this is what I always tell them. I mean, the only time it ever hurts you is it only hurts your kids. And it's not gonna hurt you. You're gonna be able to stay in your household, like you said. And I know you told me this in the past, but if it's the kids that are worried about the house, what is it then? Those are probably the wrong kids to have in the family, because they're looking for the household when you pass almost. And so it's one of those things that you gotta be looking out in the right way. You don't wanna be put into a nursing home that's across the town, not taking care of you the right way, and still costing more money, if you've taken all of your money from bucket 2. So we're gonna cover this and the stigmas in the next part 2 of really just how you can look at the right reverse mortgages, who to contact, and just what you should be looking for, and ask the right questions.
Well, thank you so much for watching this segment. We appreciate you. So please subscribe to the channel if you haven't subscribed. Hit the notification bell so we'll let you know exactly when the next video will be appearing. And please give us a call at 303-779-6600 to learn more about mortgages, reverse mortgages, liquidity, and not having your money liquid. We're here to help you.
And Ruth, if you don't mind too, would you share your number too so they can call you directly for
Certainly.
reverse mortgage questions?
My number is 719-592-0855. And whether it's a reverse mortgage or a traditional forward mortgage, come and talk to us.
That's great. Thank you so much, and we'll see you on part 2.